scenario for in the situation we have a signal in Telegram. So you might have seen lots of yes messages and no messages. And a yes is to open and a no is to close. So it's dead simple, nice and easy, like very logical. So let's say, for example, just now we had the Euro USD sell signal. Okay, so that's great. Well, how would I use the spreadsheet? I personally, before I took any signal, would be to check your search tool. So open your spreadsheet, go to the glossary, and then click on that. It should bring up a hyperlink if you hover your mouse over. Click it, and it should take us there. So we can see Euro Yen as a sell because we see lots of reds. But let's go to the Euro USD. How are we looking? Right, so technically, it's quite weak because we're below the monthly pivot, weekly pivot, and below the 7-day mean. Now, the 7-day mean is your closing price at 10 p.m. every day, and it's the average of that price over the week. So it's quite straightforward. Now, what I was saying earlier on in my prior video was to take more attention on the movement across time, the microscopic view, than actually the binocular view. So this is more powerful than that because this tells us the DOM positioning of the herd over time. So that's like a tick, 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 and a big tick. But that's like be a little bit careful because at a high level we are a buy, but the low level, the dynamic shifting, is saying sell, and see how we've come away from being a strong buy. And we're going to potentially come into sell. If that costs us 50%, then that's going to agree with that. And it's all a case of watching this go over time because it tells us because the retail traders are risk averse, they'll hold on to their losses and they're stubborn. Let's have a look at the average drawdown for the bears. For these guys who've been really bearish to Euro USD, they're 285 pips. And their break even's at 114.23. So these guys are encountering humongous drawdown. And you think about how much money that is on a global scale. These retail traders are just terrible. They really are. It's just horrible, right? So this is why we do the opposite of the herd, because they're just terrible traders. And they're stubborn now, and they're going to hold on to their losses. So that's what I'd do. Go to your search tool, and then check your sentiment shifting since Sunday and check your technicals and ensure that neither one was making profit. If one of them was making pips, be a little bit careful because that would be highly unusual. Usually the majority, the average, they're always losing, and that's what's always will happen till the end of time. The crowd are always often wrong, and so that's what will happen. And so if they do go and profit, it's like a warning sign. So let's do let's say hypothetically we had a Euro Yen as well. Likewise, you can see there's lots of red, and that's just confirmation. Say if we had a Euro Yen signal, we started the week as a buy and now we're a sell. So that's an example of that agreeing with this. So it's like the shift over time is now moved the average over the 50%. So at a high level we're a sell too. So just a case of using the search tool. So what else can I do? Let's go back to the glossary, go home, up the top left there, glossary, bubbles. Now hover your mouse over and click bubbles. So the Euro Yen would be a good one because we see the distance between the two. At the beginning of the week, everything aligns on that axis. Now, what would be good if you did take, say we had a Euro Yen signal, hypothetically, what you'd want to do is check your Euro bubble, and you'd want it to come over here. And you'd want the Yen bubble to potentially stay there or go this way or down. So if you did take a Euro Yen signal, had we got it like now, we didn't, we got it on Tuesday. So you'd want to see that Euro bubble move. So this is going to be tricky because if you're at work, you can't watch the bubbles all the time. But if you get the occasional break, just check your location because this quadrant is strong sell. So where the euro bubble is right now is okay, but you don't want it to come over here. Not really, because then it will invalidate your signal. So hopefully that makes sense. You'd want the euro bubble to come over here. Okay, so a little bit of care there because we're very, very close to that line, and we're very close to that line. So all it would take is a little shift on the retail sentiment, and we could come to down here. So we have to be a little bit careful. But that's an example of the euro yen being a sell, and the euro USD would have been invalidated because what's happened is that the euro's got close to the dollar. Dollar comes over, then we can sell the euro USD. You see? And so how else can I use the spreadsheet? So hopefully that makes sense. You see how the Aussie bubble is strong sell. We'll go back to glossary, and maybe what we could see is the sentiment heat map. So where are we on the euro yen? So what I do on Sunday nights, for a couple of hours, I watch these boxes get populated. So euro yen. So if they go one way, they're selling it. They're going long, but they're adding. And you see what happens because the more they become convinced of the direction, that the opposite will happen. And so this is why the euro yen fell, because they're going long over time. And what you could do potentially is that you could have some kind of rule where if it crosses the 5%, perhaps that would be a good entry point. There are so many possibilities for the spreadsheet. It's almost infinite, really, because it's just so powerful. So we come to the Kiwi USD. Perhaps should be a buy signal if it crosses the 5% here. You see, and you see how all the yen crosses are actually bearish because they're going long, and so that's how that works. So pound yen could potentially be a sell if it crosses over. See, it's all about the dumb positioning over time, and because they go one way, they have their stops, and eventually they're going to get stopped out or they'll have their account blown up because what happened is that they're over leveraged and they have terrible risk management. So by subscribing to the sheet, you'll do the opposite of those guys, and you'll have access to what the market makers and the banks are able to see. They're able to see what you're doing in real time, and we can see that on the spreadsheet. We can see what the herd are doing, and as long as we know that they're going to be terrible at trading, then we'll do the opposite and we'll be fine. So it's a good example of what you could potentially use, for a signal for you. And then we'll come back to home. And another one would be just to check the behavior. Now, the Aussie bubble is behaving well because when the retail go one way, they get punished. And they've gone long with the Aussie across all pairs. And what's happened? The price has fallen. Likewise, the yen is behaving well. And so we see the Swissy slightly misbehaving, but it's not too major. What we'd want to be careful are things like this, the pound, where we're seeing chop, where they're going one way, but yet they're getting paid. And that would be unusual because the retail shouldn't be making money. So we'd want to avoid the pound and we'd want to avoid the Kiwi. And the Euro's slightly tricky because of these two, the Euro pound and the Euro Kiwi. See, they're going long and they're getting paid. And that would be unusual. So you could potentially look at your sentiment versus price. It's just for behavior. So the dollar's starting to behave quite well. So go back to home. And so how are we looking? So that's about it, I think. SLC and size. We've taken the SLC out on the Euro yen. So when I populate it in the morning, this would have been your target, essentially. And I'm trying to get everyone to get on board the FX SSI indicator so you can see where the stops are in real time. And so this is a good tab to look at for your target areas. And now that would have changed now. So yeah, hopefully it's a good example. Just a 10-minute video. There's so much to it, and the fact that you'll be able to do the opposite of the herd and not become them anymore, and you'll be just be empowered, and you avoid the mistakes that they make, and there's just a lot to it. There's our signals just to show you the. We started at 0. We've up now 2,400 pips just by doing the opposite of the herd. So yeah, it's proof that it works, and how terrible the crowd are. So this time next year we're gonna just be triple, quadruple. But the key is, if the more people know about it, then the less powerful the sentiment analysis will be. So we need the herd to remain ignorant of this. So it's kind of like an exclusive club, but I think for the price that it is currently, I think it's an absolute bargain, and this is the reason why it's going to go up in 2021. Because obviously, the less people know about it, the better, and the information that you can get and how you can exploit the herd is just so powerful. It's easily worth the $30 a month, because that's just like one stop loss, and you avoid being stopped out by looking at the retail sentiment. So it pays for itself, and yeah. So I've spent a long time on it. It's my baby now, so I'm quite proud of it. But if you were interested, just let me know. Send me a message. And my Patreon is patreon.com/quasidb. My website is quasidb.com. And I'll look forward to getting any questions, and I'll hopefully speak to you soon.